for a home, the first step is to find out how much of a mortgage you qualify for and also get a handle on your finances, your down payment, and source and amount available for deposit. I'll not show anyone a home until I know they're well on their way to getting approved for financing. And with my client's permission, I've actually spoken to the mortgage agent. You can find many online calculators that will ask you to input your salary, your debts, your liabilities, and assets, and it'll give you a mortgage qualification amount. I have a great app for this on my website. However, the number that's provided is just a guideline and may not mean you can get a loan for that amount. You must always verify this with a bank or your mortgage agent. When you visit an expert, make sure that you complete a loan application and that your mortgage agent is looking at your credit scores and that you've given them accurate numbers for your salary, your debts, your liabilities, and your assets. Here are some documents that you should bring to your meeting. They'll ask you for most, if not all, of the following things. Be proactive and take them with you for your first meeting to avoid delays in getting pre-qualified or pre-approved. 1, you'll need identification, driver's license, passport, your social insurance number, a summary of your assets, including balances in your savings and checking accounts, your RSP and investment balances, any vehicles that you own, a summary of liabilities, including credit cards, mortgages, car loans, and other debts, your pay stubs, your T4 or T1 general notice of assessment, an employment letter, documentation of any alternative sources of income. If you're self-employed, you'll need 2 years notice of assessments and proof that your business was incorporated for at least 2 years. You'll need proof of your down payment, including your bank statements, RSP and investment statements, and source of borrowed funds. A pre-qualification means that based on the information you provided to your mortgage agent, you're qualified for a certain amount for a mortgage. This may or may not include your down payment. So, for example, you may be qualified for a mortgage of $500,000, but you also have a down payment of $200,000. Your purchasing power may now be $700,000. Double check this with your mortgage agent. A pre-qualification may not include checking all the details in your mortgage application. It does not mean that you're approved for this mortgage amount. It means you may be approved for this mortgage based on the information provided. So therefore, you have to use this information carefully when bidding on homes, especially if you're removing financing conditions from your offers as a bidding strategy. Pre-approval means that the lender has given approval for the mortgage before you purchase a home. Not many banks or lenders will do this. It's almost a guarantee you'll get the mortgage amount depending on the property you select. Because not all lenders will issue a pre-approval, it is vital that you discuss your financing position with your mortgage agent and be very comfortable with your financial position. Okay, so why rate isn't the only thing to consider. Getting a good deal and saving as much money as possible is important, but the best rate may not always be the best option for you, nor may you qualify for the best rate. Sometimes very low rate mortgages are no-frill mortgages, which means there are no benefits associated with them. You may not be able to pay down the balance earlier. You may have a huge penalty to break the mortgage. For example, if you sell the home before the mortgage term's up. Paying a tiny bit more in a rate can save you thousands of dollars if there are any changes to your life situation, and it will only cost you a few dollars more a month. If you're not a perfect AAA client with stellar credit, a stable job, stable salary job, and little debt, you may not qualify for rock bottom interest rates. A good mortgage agent will explain all of this to you and put you in a mortgage package that makes sense to your situation, your lifestyle, and any upcoming life changes. Make sure to ask a lot of questions. After you've been pre-qualified or pre-approved, please do not do anything to change your credit application until you get the keys to your new home. This means avoid job changes, career changes, taking out new credit, buying furniture on credit, cars, credit cards, lines of credit. A lender can revoke your mortgage approval at the very last minute. For example, if you decide to buy new furniture for your new home a few days before closing and finance it with the furniture store like the Brick or Leon's or your credit card, the mortgage lender can look at your credit report up until the day of closing. If they find something they don't like, they can decide not to give you that mortgage, and you may not end up with your home. Always be in touch with your mortgage expert in case you haven't. Please check out my other videos on my channel for more educational videos and tips. Don't forget to like, share, and subscribe to my channel. Visit my webpage for valuable resources such as the links to the books I've written or a link to my valuable mortgage calculator app. Happy house hunting!